a little bit better with that, which is nice.
Good.
All right. Well, it is 1:30. So we are ready for Avalara to take it away with a guide for managing exemption certificates and exemption certificate sales 101. So I will let you take it away, Connor.
All right. And then Jessica, do you want us to get us rolling on some of the T's and C's?
Sure, absolutely. I'm happy to. So thank you everybody for joining us today for Tax-Exempt Sales 101. Just a quick disclaimer, while we hope that you find this information helpful, the session is strictly for informational purpose. We are not here to offer you legal or tax advice, just suggestions and compliance information. So please do reach out if you have any questions, or certainly reach out to a tax advisor for additional support as well. So with that, Connor, take it away.
Terrific. Thanks, Jessica. So, hey, everyone. Appreciate you spending some time with me today. Quick intro on myself. My name is Connor O'Donnell. I am Avalara's Acumatica specialist, which means I work with folks in a variety of different stages within that Acumatica ecosystem. So whether they're on Acumatica right now or transitioning to Acumatica or even just considering Acumatica. And I work with these individuals and companies to craft up compliance solutions based off their needs and what the level of automation that they're looking to bring to those compliance processes. So what are we going to tackle in today's conversation? The headline definitely gave it away, but we're talking all things exemptions, exemption certificates, exemption status, and then the correlating and ripple effects of exemption certificates, correlating effects of if those processes are not as compliant or not as robust as they could be. And then we'll end things today with going through a Q&A. So if you have any questions, of course, feel free to put them into the chat, or we'll tackle them at the end of the call, the webinar. And then we have a few seated questions throughout just to make sure that we're tailoring today's conversation based off what you all are looking for. So we'll take it big picture and then really start to hone in on what y'all are looking for in today's conversation. So as we get started, we'll start high level here. So Avalara, just in a nutshell, we're here to help you execute compliance, all things compliance. We make it simple to automate those compliance processes through our robust products, which we'll talk about in today's webinar. And really, ultimately, our goal is to help businesses like you all, partners like you all, in order to make either your or your clients' processes in compliance as easy as possible, so they or you can focus on what makes your business your business. We'll take care of automation for compliance, and you get back to what makes your business its own individual self. And so really how we have accomplished this goal and how we continue to accomplish this goal is we built an industry-leading cloud-based end-to-end tax compliance solution, which we'll talk about in today's conversation with particular focus on our exemption certificate management system. And so, of course, it's a webinar. We've got to have a bragging slide, and this is ours. You can see some of the highlights of what we've accomplished since we've been around in the past 2 decades. Some things that kind of come to mind as I look at this slide. I mean, we've filed 5.2 million returns, 40 billion tax determinations, and we have over 30,000 customers. But most importantly for this webinar, if you go to the bottom left-hand corner, we manage 31 million documents or exemption certificates in 2022. So highly robust when it comes to our products, but just also our capacity. There's not much that can trip us up here at Avalara. We are here to align with your compliance needs. So first poll question, what is your biggest tax compliance challenge? And as you can see here, it popped up. We have filing and remitting, tax calculation, exemption, exempt customer and certificate management, use tax, or nexus footprint. So I'll let y'all answer that as I go to the next. And I've found that the tricky part is as a business scales, as it grows, as it becomes a more of a nationwide presence, the complexity of their compliance processes, it scales alongside you. So that's where Avalara comes into play. Our core purpose is to ease the burden of businesses by automating those compliance related tasks. So let's go into the tax exempt landscape. And first up, just let's high level, just set the scene of what is tax exempt sales. So if you're selling a product that would be taxable, but the buyer is stating that they're tax exempt, there needs to be documentation to prove to the state or jurisdiction in question why you as a seller did not charge sales tax. To put it really bluntly, the onus is on you as a business. You are responsible for making that determination, making that documentation. And so if you as a seller have nexus or an obligation in that jurisdiction to charge sales tax in a normal situation, then you need to collect that documentation to prove why you didn't. Ultimately, it is coming down to you. Setting the landscape, I mean, there are over 1,600 different exemption certificate forms in the United States. Don't let that number scare you. 80% of tax exempt sales fall into about 80 to 100 tax exempt forms. So while there is a whole host of different tax exempt forms out there, the majority are between 80 to 100. So there's kind of that repeat cadence that we see with our customers with the type of exemption certificates that they're forming. So I like this to start off this slide when we're talking exemption certificate, because again, it really puts a definitive point on the fact that the onus is on you as a seller to collect the right form from your customers, but also not just collect the form, but ensure that it's filled out and completed correctly. And we're going to talk a lot about that today. So when are our tax transactions tax exempt? So there's multiple reasons why a buyer can claim an exemption to sales tax, but there's really two main categories. That exemption is customer base, or that exemption is for the intended use of the good. So let's break those down. So if it's customer base, an organization can be exempt due to really just their status. Certain businesses have gained tax exempt status from the governments in the states that they're working within. Some of these reasons might be they're a nonprofit, they're government, they're healthcare and hospitals. So these are type of classifications that your customer might be, why they're exempt. But there's also the second reason why, and that's the intended use of the good. So for example, let's say you're selling water bottles and you're selling to a customer who's going to resell your product. Because that end customer, or because that in between customer between you and the ultimate user is reselling that product, that good is being resold, therefore it is a tax exempt sale. So as we work our way through this graphic, I like it because it really gives just an end-to-end example of how, there we go, of how an exemption certificate goes from start to end, and really just where the different onuses happen when it comes from resellers to resellers to resellers. So this is typical in the supply chain. In the past, unless one of the companies selling in the middle part of this graphic had physical presence in the location of the buyer, the seller in question did not have to collect exemption certificate. But things have changed, and really the reason for that change is South Dakota versus Wayfair, the Supreme Court decision. We'll talk more about that later, but because of that Supreme Court decision, manufacturers are subject to the same nexus rules as those companies who are selling business to consumer. So if the subject of the same nexus rules, if the companies have nexus without an exemption certificate from the buyer, the seller ultimately needs to charge sales tax in that supply chain. And you can see kind of how those scenarios change from the seller to the buyer. Alrighty, so want to make it a little bit more individual for y'all. So here are 4 common compliance challenges that we see for tax exempt sellers. And before we dive into those 4 different challenges, we've got a second poll question for you. So the poll question as it pops up here on your screen is, what percentage of your invoices or businesses to tax exempt customers? Is it 0 to 25%, 26 to 50%, 51 to 75%, or 76 to 100%? So let us know, and we'll definitely keep that in mind and continue on with the webinar. So first challenge, and most important in my opinion, is Nexus. a great jumping off point here is to provide just a high level definition of nexus if you're not familiar with it. Nexus is simply a business's obligation to get registered in a specific state based off certain criteria, also known as nexus triggers or nexus thresholds. So in the beginning, Nexus is really a hot button here topic at Avalara because it's become much more complicated in the last 5 years. Previously, Nexus was solely based off location. If you had a brick and mortar location in North Carolina where I'm at, you only needed to get registered in North Carolina. But as I mentioned about 2 slides ago, through that Supreme Court decision, South Dakota versus Wayfair, that's not the case anymore. Now Nexus has different triggers such as economic nexus, affiliate nexus, marketplace nexus. So if you're selling through Amazon or eBay or Walmart. So let's start first with economic nexus because that's a really complicated one. So along with physical nexus being brick and mortar locations, a physical employee located in that state, inventory located in that state, economic nexus is the second most common trigger of nexus that we see here at Avalara. So economic nexus is comprised of 2 different data points, sales volume, so sales volume being the number of transactions into a state each year, and then sales revenue, which in other words is just the dollar amount into that state. So what makes economic nexus so complicated is that each state has their own unique threshold requirements. And you can kind of see them color coded here on this map. In that deep kind of burnt orange, you've got Texas and California and New York. Their economic nexus thresholds are significantly higher. It's $500,000. So if you're selling $499,999.99 into the state of Texas, you have not triggered economic nexus. The moment you get that extra penny and it goes up to 500,000, your business or your customer's business, if you are a partner, has achieved economic nexus in that state. But it also gets kind of even more complicated because some states take dollar amount or transaction amount. So in the middle one here in that kind of more peach color, you can see 100,000 or 200 transactions like in Nevada or Utah or Wyoming, Georgia, North Carolina, where I'm at also does that. So there's a variety of different thresholds here. And rather than you all having to manually keep all these different thoughts in your head, this is where Avalara comes into play, and we'll talk about that. But before we go into Avalara's solutions, you know, I know the purpose of the webinar, right? We're talking exempt sales, and I know we have a bunch of different companies on this call, but you might be thinking, "Hey, economic nexus, that's interesting. I appreciate it, Connor, but my business is predominantly working with exempt customers, or my business provides exempt service offerings. So Nexus doesn't really relate to me." Unfortunately, I do have to dissuade you of that opinion. This is not the case. Exempt sales make a very tangible impact on economic nexus, as you can see here on this map. So any state that's orange, that's where exempt sales are included in those economic nexus thresholds. Again, from the last slide, 500,000, 250,000, 100,000. So as you can see, these states, I mean, that's a lion's share of the states take into account economic exempt sales in those economic nexus thresholds. But just calling your attention to a few other things, because this is a really interesting map, in my opinion. If we go to the purple one, like California or New York, Kansas, New Mexico, these are mixed states that have kind of mixed rules. In those states, exempt sales are excluded from the threshold, so they're not included, but exempt sales are included, whereas exempt services are excluded. So kind of interesting differentiation to make there. And then if we go to blue states, they do not count exempt sales. So Missouri, Oklahoma, North Dakota. But as you can see, there's about only 5 states that don't take into account exempt sales. A majority are taking into account gross sales, gross revenue, including your taxable and your exempt sales. So again, just hammering home the point, there's no such thing as broad generalizations in compliance. It's really important to dig into the details, and the devil's in the details here. So really what we find here at Avalara, and just having worked in this role for the past 4 years specific to Acumatica, what makes exemption certificate management so difficult is that the obligation is on you as the seller to prove why you did not charge sales tax. And certificates are vital because they're your shield during audit. Kind of looking at the burden of the proof. I always say this, I mean, auditors are humans too. We're going to talk about audits in this webinar, but I always like to humanize them because they're people too. They have bad days. But they can really have some harsh punishments for businesses who are out of compliance when it comes to exemption certificates. Auditors are well within their rights to penalize when a exemption certificate is not provided on a transaction, and they're well within that right to consider that what should be exempt sale as a taxable sale, and then penalize you for the sales tax that should have been collected if there's no exemption certificate on file and if you're not able to provide one. So there's definitely financial ramifications of not having a robust process when it comes to exemption certificate management. Alrighty, so let's go into the customer experience, because no matter what industry of business that you are in, we all have customers and we all want to make sure that their experience working with our businesses is top notch, so they will continue to patronize our business. But we've heard that mismanagement of exemption certificates can lead to a few troublesome customer experiences, some that kind of bubble up to the top. Customers might feel burdened by providing an inaccurate certificate on time. They might feel like it's an onerous process for them to have to manually figure out what exemption certificate that they have, sign it, send it over to you, continually to provide one as those exemption certificates expire. We also find that some of these more troublesome processes that businesses are dealing with is customers are people too, just like auditors, but they don't always give accurate information. Maybe not intentionally, but unintentionally providing misinformation, an unsigned exemption certificate, the wrong exemption certificate. And again, having not just a certificate, but the right and an accurate certificate is vital for you all during an audit as you're working with the auditor. And we find that some of these inaccuracies happen because, I mean, most people aren't tax professionals. Most people don't know exactly the right type of exemption certificate to have, or know the difference between tax-exempt certificate XYZ versus tax-exempt certificate AB. So rather than, them being the expert, this is where Avalara software will come in and be the expert that we'll talk about a little bit later in this webinar. But I think the biggest one that we hear of where customers, when I talk with customers and say, just, why are you looking to automate your exemption certificate process? It's billing. If you don't have the right exemption certificate on file, customers who are exempt might accidentally get taxed. Customers who should be exempt, might provide that exemption certificate after the fact, and then businesses like you all have to credit and then rebill and then update the return for that transaction. So there's a lot of, I'd say, ripple effects that can happen with your customers when it comes to the process of exemption certificate management. So going into number 3, we'll talk about the impact of omni-channel selling as it relates to exemption certificates. So this slide is interesting to me because it just kind of hammers home the idea that businesses like you all have a plethora of different options of how you can ultimately sell your services, sell your goods to your potential customers. Some of those might be marketplace, they might be through your physical locations, they might be through your distributors. And so we have to take into account all of those different ways of how you can ultimately work with your customers and have a business transaction with your customers. This is interesting because it shows that B2B e-commerce is really growing. It's a powerhouse revenue channel for businesses like you all. A few key points on this slide that emphasize this point. B2B digital sales grew 17% last year. And that, 17, you might think 17%, okay. But that 17% equates to $2 trillion. So it's huge. It's, I mean, again, a powerhouse revenue channel. And then it's kind of interesting as we all get comfortable as buyers with e-commerce, 70% of decision makers are prepared to spend up to $500,000 on a single e-commerce transaction. So gone are the days where it's the hesitancy to buy online. That's the preference now. And so with that, Avalara's exemption certificate management system needs to be able to allow the retrieval of these exemption certificate documents from all of these different channels where your customers can buy, whether it be in store, whether it be through a marketplace, whether it be in the field as your reps and sales folks are out in the field, whether it be e-commerce. So we ultimately, and we're going to talk about Avalara's different integrations at the end, but not to bury the lead, we are able to integrate into all of these different platforms to make sure that you're keeping your updated exemption certificates and gaining those updated certificates from your customer at the time of sale. Alrighty, so switching gears a little bit here from omnichannel, let's go into more about audits because tax-exempt sellers have a big challenge to undertake when you're progressing through an audit. And we want to make sure as Avalara, as a partner of your business, we want to make sure that we're allowing you to get through and assisting you to get through that audit as unscathed as possible. Or we always hope to make audits a smooth, painless process, or as smooth and painless as an audit can be. So going into this, ultimately, I kind of equate audits like jury duty. And why I think that way is because you really don't know if your business is selected for an audit until you receive that letter in the mail, no different than jury duty. So in the interim period where you're waiting for that snail mail to hit your desk, there are some things to keep in mind about an audits that we have listed here. So often the first place that auditors start when they begin their audit of your business is show me all the transactions that you didn't charge sales tax for. That's really just the easy first step for them. And anecdotally, that's where we hear that a lot of auditors do start their audit. Audits are done on a sampling basis. So using that sample to be applied to all of your transactions. And then when it comes to penalties, if that is, unfortunately something that your business does have to endure, penalties and the assessments can go back years. So most are 3 years. Occasionally some are 4, but there's certain states like New Mexico, they can go back 7 years. So it's not just, hey, do I have a snapshot of my exemption certificates correct? You have to look back into, did I previously have my exemption certificates correct? Did I previously have a robust process for tracking my exemption certificates when I was or was not collecting sales tax? But when it does come to penalties, just kind of putting a bow on that, penalties really do vary state by state. So like I said previously, there's no generalizations in compliance. Penalties when it comes to audits are in the exact same boat. So going into it, most audits were completed within 3 weeks, though a small percentage did drag on to about 5 months or more. And then an interesting data point that we derived here is it took employees an average of 35 hours to oversee and respond to an audit. And then about 3% of companies, so a smaller percentage of them, it took more than 100 hours. So, the inverse of that, most companies are spending 10 or few hours on an audit. So the amount, it can be relatively low. But again, if you don't have the right certificates, it really does not only increase the amount of time, but it also increases the amount of penalties that can be derived from said audit. And then this is just a slide I like to put in here too, because it really shows the reasons for an audit, audit penalties. And really, it's just human error, right? That's almost 50%, almost half of why businesses like you all are getting penalties during an audit. But you can see in that close second, it's missing exemption certificates. So the human aspect of it, the human error aspect of it, and not having exemption certificates are really making the majority of penalties during audits. All right, y'all. So enough doom and gloom. Let's talk about best practices, because ultimately, yes, it's complicated. Yes, exemption certificate management, manually managing that yourself, it's an onerous task. but it's not something that Avalara is not used to coming in, understanding your business, understanding your process flow, how you're selling to your customers, and then providing a solution accordingly. So before we go into the best practices, let's go into our third poll question. So the question is, how much urgency do you feel to implement an automated sales and use tax compliance solution? Number one, I feel the pain, exclamation point. I need it now. It's on the second one, it's on my to-do list, but I have other priorities that are more pressing. Number three, it isn't on my radar. And number four, I'm already a tax automation pro. So let us know how you are. It's always interesting to kind of get a sampling of the folks who are on the webinar of how you consider yourself. Alrighty, so let's talk about the management and the steps of tax compliance, because it is linear, which makes it nice. There's a little bit of order to the chaos of compliance. So the first step in managing sales tax compliance, first and foremost, it's understanding your nexus footprint, which again is where you need to collect and remit sales tax based off a variety of different nexus triggers or nexus thresholds, like we talked about: economic nexus, physical nexus, marketplace nexus, affiliate nexus. Once you understand where you've established nexus, whether it's all those different types of nexus, from there we need to get you registered. And whether you get yourself registered or you can utilize Avalara, where we'll register you in a certain state on your behalf. So that, again, another automated solution you can utilize Avalara for. But as you go to number three, upon getting registered, you now have a requirement to begin collecting sales tax. And trying to calculate the correct amount of tax can be rather difficult. So we'll take a deeper dive into how we help out with getting those correct tax rates. But if you go into the next one, which is actually flip-flopped, you need to make sure you're collecting the right exemption certificate. So if you're selling to any of those exempt entities, like we talked about, whether they be resellers, distributors, manufacturers, you need to keep track of those exemption certificates. And then once you've done 1 through 4, then we go all the way to number 5, and that's where you're filing remitting. And Avalara, of course, can do that on your behalf. And so let's talk a little bit about what some of these Avalara solutions do look like in our tax determination suite. Alrighty, so I'm just going to go through a standard process flow here of how Avalara works on the back end. So as we come down here to systems, this is where we're connecting into your system. Now, whether that be into your ERP of Acumatica, whether that be into an e-commerce platform that you're utilizing, a POS system, a CRM, Avalara is going to connect into your system. And then from there, we're going to roll. So when you're going through your typical invoicing process, because we have that pre-built integration, you're going to just follow your same exact process. There's no change. You're not switching screens. But when you're saving on that invoice, whether it be for a finalized invoice, or if you're quoting out a project and you need to provide a bid or a quote to your customers, when you're saving that either sales quote or invoice, then your system will call up to Avalara's tax engine called Avatax. And our tax engine is monitoring all 13,000 tax jurisdictions across the United States. And we're getting that exact right tax jurisdiction based off the specifics of your invoice. So taking into account your ship to, your ship from. And then from there, we're applying the correct sales tax to it. So we're getting at all the different levels of that sales tax jurisdiction into play. So the state, the county, the city, and any special or local taxes. We add all those up, and then we'll push back a simple number of 7.25 or 4.7 or 10.4 into your system, Acumatica, your e-commerce system, with that invoice with the correct sales tax aligned to it. So all that's happening in under a sub-second. It takes me a lot longer to explain it than it does to actually happen, but from your end, you're just clicking save on your invoice, and our system's doing the rest. But if you're following that same exact process flow, not every single invoice that you have or every single customer that you are working with has a taxable entity or has a taxable transaction. A lot of times we're dealing with exempt customers or we're dealing with exempt services. So Avalara has to take that in mind, and our products ultimately align with that accordingly. So if you follow through that same exact flow again, you click save on your invoice within your system. It calls up to our tax engine, Avatax. Avatax will make a simultaneous call to our exemption certificate management system titled ECM. And ECM is our end-to-end exemption certificate management system. And so when Avatax calls to ECM, I always think of it like a Rolodex. It rolls through all of your exemption certificates and it's looking for that specific customer on the invoice. So for this example, let's just say it's customer XYZ, and ECM is rolling through trying to find customer XYZ's exemption certificate. And let's say for the scenario, they do find it. We see customer exemption certificate for customer XYZ here in North Carolina. This is active, it's up to date. We do not need to align sales tax to this invoice. So ECM, our exemption certificate management, tells Avatax, hey, don't align sales tax. This is an exempt transaction. This is an exempt customer. We don't need to align sales tax to it. And so we'll push that invoice back without any sales tax line because we've made that determination that this is an exempt invoice for those two different reasons. That same exact process flow, though, if we roll through it and there's not customer XYZ's exemption certificate on file, our system is going to make the assumption, unless Acumatica or your system has told us otherwise, that this is a taxable customer and will align sales tax to that customer. So the really interesting part about this is that it's making sure that your taxable customers are getting taxed, of course, but it's also ensuring that your non-taxable customers are not getting taxed. And diving a little bit deeper here into ECM. So as you can see here, there's that two-way street when it comes to our exemption certificate management system, because you're ultimately needing to get new exemption certificates from your new customers, but also from your customers who are working with you on an ongoing basis where their exemption certificates might have expired. So that's what ECM does. So utilizing ECM, it can automatically request a new exemption certificate from your new customer. It'll send them through our portal, the correct certificate, one based off their location, but two based off of their classification status, like we talked about a lot earlier in this webinar. So whether that be because they're a reseller, a nonprofit, healthcare, government, you name it. Our system has all 1,600 exemption certificates within our repository, and we'll send your customer the correct certificate. So if it's a reseller in North Carolina, you click reseller North Carolina, and then we'll send that customer the resale exemption certificate specific to North Carolina. They electronically sign, upload it, click upload, and it's in your system. It's as simple as that. From there, we're managing the entire life cycle of that certificate, because each and every certificate, state by state, has different expiration cadences. So for example, Florida exemption certificates expire every year. So at December 31st of this year, you're going to have to collect new exemption certificates from your Florida exempt customers. Some states don't have that cadence frequency. North Carolina, where I'm at, they're good indefinitely. So if you get one, you're good to go. Illinois, they expire every 3 years. So, you have these different cadences. Our tool, exemption certificate management tool, is able to use object character reader, so AI, to pull the specifics of that exemption certificate off of that PDF, and then know exactly when that certificate is going to expire if it does. And then from there, we can set rules to say, hey, if a certificate's going to expire in the next 30 days or 60 days or 90 days, automatically make a request for a new certificate. So we're not just managing the life cycle of that certificate when an invoice is going through. We're managing the life cycle of that certificate on an ongoing basis as you're continually working with your customers. You're knowing and having peace of mind on the back end that our exemption certificate management system is taking care of everything. So now that we've got all that taken care of, now that you know that you've collected the right tax where you need to, you've not collected tax where it's an exempt customer, from there, our tax engine pushes the sales tax data over to our returns platform where we file and remit on your behalf. So we know your cadence and filing frequency, whether that be annually, semi-annually, quarterly, or monthly in that state, and then we'll just replicate that filing frequency. So if you're quarterly in North Carolina, when you're pushing over Q2 sales tax data to be filed and remitted in North Carolina, our system has that Q2 data for North Carolina ready to go. We push it over to returns and then file and remit on your behalf via an ACH payment. So truly a fully end-to-end automated solution when it comes to Avalara's tax determination suite. All right, so let's talk about some cool stuff when it comes to updates and new releases that we've had, because we just high level, while we have 36 different tax ERP integrations and e-commerce connectors for document management, we take a lot of pride in our relationship with Acumatica here at Avalara. We have been partnered with Acumatica for over 10 years, I think at 15 years at this point. And then we are actually who Acumatica use on the back end for their compliance processes. So Acumatica as a business utilizes Avalara. They use our exemption certificate management system. They use our tax engine. They use our returns platform. Everything that we've talked about is what Acumatica is utilizing with their partnership with Avalara. So we take a lot of pride in that. We also take a lot of pride in that our integration between Avalara and Acumatica, that integration, that pre-built integration was developed by Acumatica developers. So it's folks who log on and they are Acumatica Blue developers. They are the one that created that integration. So the nice part is no matter what version of Acumatica or release on Acumatica, either you as a business or if for you as a partners, your clients version that they're on, we are compatible with all releases, all versions of Acumatica. So because of that long-term partnership, there's a lot of give and take that we do where we take the feedback from customers and prospective customers like you all, and we talk to Acumatica and we have regular meetings with them about, hey, this is what we're seeing out in the field of what customers or what prospective customers are wanting from Avalara via their Acumatica instance. And so we work really diligently to take that feedback and then utilize it to actually make developments and upgrades to the integration and the overall functionality between Acumatica and Avalara. So just a few to run through, so kind of chronologically. So we have address validation. That happened back in R1 2021, where we're actually doing address validation within Acumatica. We have geolocation that came out in R2 of 2021. Geolocation, what I mean by that is we'll take whatever address that is used in Acumatica for invoicing, and then we break it into a latitude, longitude coordinate to use a pinpoint of geolocation to get the exact right tax jurisdiction. Last year, so in R1 2023, we formulated a use tax functionality. Being candid with y'all, use tax in situations where it's not overly complex. I'm not one to oversell anything. So this is use tax where it might be internal usage of use tax rather than use tax that you might think of like construction or some of those more complicated ones. We're still working with Acumatica for that one, but we still have capabilities on a more simplistic view for use tax via the R1 2023 update. But the one that we're really proud of that just came about, so in R1 2024 with this newest release, Avalara, or excuse me, our exemption certificate management system, ECM, is integrated right into Acumatica. So you're not switching screens, you're managing your exemption certificates right within your instance of Avalara, Acumatica. On the back end through that integration, we're connected into Avalara's exemption certificate management system. So a really, really exciting update that we're integrated via ECM, our exemption certificate management system, right into Acumatica. So we were excited about that upgrade. And again, thankful that Acumatica is so invested in R&D in this partnership between the two companies. So as I wrap up here, some of these things just show a little bit more about what Avalara and Acumatica can do together via our exemption certificate management system, again, ECM. We can create customers on that bulk processing level. We can update those customers. We can map either to a single or multiple company codes, all within Acumatica. And then on that actual like profile side of things, you can create a customer in ECM provider, you can update them, you can retrieve existing certificates, and then you can also request new ones. So this is essentially taking that R1 2024 update that I just mentioned and giving you a little bit more tangibles of what we can do within Acumatica and how it can actually be utilized on a very tangible basis. So very exciting stuff that we're developing. And again, if you are an Avalara customer currently, or if you are a prospective customer of Avalara, and there's something in your compliance process that we're not able to assist with for whatever reason, variety of reason that might be, just let us know, because we are it's a two-way feedback channel of we're always looking for constant improvement and optimization of what Avalara and Acumatica can do together, not just for exemption certificate, but just in compliance in general. So I wanted to leave time here for questions. So are there any questions about anything that we've discussed about Avalara in general, anything that I can assist with as we have some time here?
No questions yet, but if you do have them, feel free to put them in the chat or the Q&A so we can answer them now. Don't be shy. I'd love to hear your questions. This is the time to ask them while we have the Avalara experts here to answer them.
Well, if there's no questions too, if you're interested in learning more about Avalara, you can reach out to acumatica@avalara.com. You can also visit the Acumatica marketplace, where it goes all into the Avalara side of things. It goes into the integration, goes into functionalities. And if you are a prospective customer of Avalara and you are interested in learning more, of course, feel free to reach out to me. Things will be routed to me if you reach out to acumatica@avalara.com. And just let them know that you saw the webinar and you're interested in learning more about Avalara, and I'd love to have a conversation with you and learn if we could be a value add partner to you. So I do appreciate everyone's time today and for being engaged in this subject, because we can't avoid it. Exempt customers are just as much a part of the compliance process as taxable customers.
We do have a question. So they said, I do have a question, but it's more for support. Can I ask?
Sure. Yeah.
Go ahead, Michael.
If I'm not the right person, I can certainly help get you to the right person.
Well, we'll wait for him to ask that question. Here it goes. Arkansas state tax has 2 entries under the same title for different amounts.
So I'm going to answer that. If I go on a wrong tangent, Michael,
Acumatica can only accept 1. How do we handle the second one?
Yeah, I hate to not answer a question, but let me get with my senior product solutions engineer for a more nuanced question like that. I don't want to gander or guess and send you on the wrong path. So I've copied and pasted this. I'll get that answer to you, and then we'll get your information after this, Michael, and I'll just send you an email letting you know about Arkansas, because I'm not familiar with how that happens, especially with the integration with Acumatica, but happy to get that answer for you.
Thanks, Michael, for asking. Any other questions? Feel free to put them in. Otherwise, you'll get a few minutes before our last but not least presentation of the day.
And then, so for this one, so this would be considered multi-tax. I'll get confirmation, of course. When it comes to technical, I always like to confirm. This sounds like multi-tax to me, Michael. So this is in which, this can be for a variety of different multi-tax reasons. Sometimes multi-tax is with rentals. Sometimes it's with manufacturing parts. Louisiana also has multi-tax as well. We have different functionalities with multi-tax here at Avalara. It's not an issue for Avalara, but Acumatica actually doesn't support multi-tax. So that would be something that we would have to write an individual customization for because the pre-built integration between Acumatica and Avalara does not support multi-tax.
You got that answer fast.
Well, he wrote he said state tax has one for sales, one for shipping, and that was what that clued me into multi-tax.
And you saw, understood, thanks. Awesome. So I will say, do you need anything else from that? I can just say answer live.
I'm gonna confirm it though too, just to be sure.
Okay. Well, and then I will can get his contact information to you if you need it.